Guys, we have not seen this in 40 years, and it's time you pay attention because what comes next is really important. Let's dive in.
Trade Genius.
Hey buddy, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Just promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening.
So Bob, the stock market's been just ripping this last Q4. Basically, those positive flows that we were looking for coming in after October manifested more, I think, than anybody had thought they would, tickling all-time highs here. But you found an interesting chart that shows that, well, basically, we just haven't seen this in a long time, and what comes next is kind of scary.
Yeah, just to give people perspective, this bull market started, I would say, people argue 1982, okay? This is a super cycle that I think is coming to an end. And we have a situation where we had market action since October 30th that we haven't seen in almost 38 years. And if you want to throw the chart up, Phil, this is one standard deviation price action over the 50-day moving average. It's absolutely insane. And with no pullbacks to recharge, this is how aggressive the institutional money has been. And you only do this if you're trying to transfer your assets to somebody else. And so I don't care what you think is going to happen next year. You're in a situation now where it's basically a sell-off can happen at any moment. And, you know, we obviously know that I think it's going to be probably a self-fulfilling prophecy that next week's going to be very bullish for the market because everybody's been told it's very bullish and people are going to be diving into it, barring any crazy terrorist attack over the New Year's Day weekend, is that we probably expect the next 3 or 4 trading days to be bullish, Phil. And that's not the only thing that's out there, which is amazing, is that at this same time, we've had a year where there's been no new highs in the S&P 500.
That's crazy.
That's crazy. Now, that in itself is kind of wild, but look at when it has happened in the past.
Mm-hmm.
You know, we were joking. I said, well, we thought we should lead in with what does the Bible teach us about stock trading? Well, just read about Joseph, right? He had 7 years of fat here in the markets, and it precedes, multi-years of famine, okay? And you have a situation now where, we can go multi-years now without all-time highs in some of these stocks if we start selling off in the middle of January, into the first quarter. And so it's kind of a wake-up call to me that said, hey guys, these are the kind of things you pay attention to. You have an overbought market that can't make new highs. Phil, this is the kind of stuff that boggles my mind. This is the cognitive dissonance that people refuse to pay attention to, but definitely gets the hair on my back standing up. And, with the economic backdrop, kind of sliding here, with M2 falling, with going into an election year, which is seasonally choppy at best, I think people are definitely whistling by the graveyard. What do you think?
Yeah, what stood out to me on this box was what happened from 1999, 2000, and 2001, where in 1999 we had 35 new all-time highs in the S&P 500. Then in 2000 you only had 4, and then in 2001 you had 0. Okay, so that was the buildup and then deflation of the dot-com boom and bust. And now if you look here, I think it compares to 2021. We had 70 new all-time highs. Then in 2022 you had 1, and then in 2023 you had 0. So there's another 3-year sequence where you have a bunch of all-time highs. The next year you have just a few, like just a couple, and then the third year 0, and then recession. So in terms of how the stock market's performing, it's right on track with what you see building up to and before a recession. So I thought that was pretty stark, and we've made a lot of comparisons to the dot-com bust and also the great financial crisis as to where we are kind of in terms of the big picture and maybe the macroeconomic picture rolling over. So I thought that was extremely interesting that comparing it back to that time frame, we're doing almost the same thing. Build up of all-time highs, very little all-time highs in the second year, and no all-time highs in the third.
Well, look at 72 and 73. People say, well, it's going to be inflationary. Stock prices go up in an inflationary environment. Right, Bob? Right, Bob? Right, Bob? Look at 72 and 73 and 74.
Yeah, same.
And then we went 6 years with no new highs.
Yep.
So it doesn't matter. If you go get a deflationary impulse in asset prices, no bueno. You get an inflationary impulse in monetary policy, no bueno for the stock market. And so I think we're in one of those situations where, it's Sisyphus at the top of the mountain here, and we don't know which way the rock's going to roll back down to the bottom, but it's not going to stay here. And if people think it is, it's your money to lose. You better be getting defensive. That's all I have to say.
Yeah, and that's an interesting point too about the 70s, because again, it's that 1, 2, 3, right? We have the first year big, second year very small, and third year zero, and then all of a sudden you've got, like you said, that long extended streak of no new all-time highs, which I don't think many people are anticipating for the next few years. So it'll be interesting to see how that plays out. I think the only difference we could say here is that this market and this current regime is they're a lot quicker to print their way out of trouble than they were back in these other couple of examples. So I guess the thing here would be is that if they print again, then you know what you need to be into, right? Anything that's going to inflate the best against, because it's just all going to be inflationary, as we showed that other chart where the stock market doesn't really go up in value. It's just, it gets inflated, right? Inflation drives all this stuff. So that's where you have to figure out what's going to inflate the most against the next round of money printing, because until they show us otherwise, you have to assume they're just going to go fall back on that when times get tough for this market.
Yeah, they're going to do it till it doesn't work. And, I think we're at the push of the string. We talked about that too. Yep. People just think that if it was that easy, they'd just never stop printing money, right?
Right. So,
they know it only can work for so long before it breaks. Look, because the money just keeps getting more and more concentrated. And if I was really, really rich and somebody's offering me 5% money to kind of get through 2 or 3 years of a recession, well, guess where my money's going? I'll be 100% in short-term bonds. I'd be in a 2-year and just wait it out. And I think that's what you're going to see here.
Right.
Because, what all you have to do is, as we told you before, you just have to outrun M2 to build wealth over time.
Right.
And I'm sure there's a lot of really, really smart people and financial advisors out there advising the ultra rich, saying, hey, with M2 collapsing, why are you speculating in the stock market? Just move your money over to the bond market. We'll set a ladder up for you and just sit back and watch the show. And I think more and more people are going to do that, because one thing rich people hate the most is volatility in their wealth. Okay, they want certainty, and most of these guys will be happy to give up, outsized gains to prevent an outside loss. And that, Phil, that's how you trade personally, is that, you take less trades, higher percentage, because, you would rather be more comfortable with a gain that's certain or not be in the game at all. And that, I think if you look back in the most successful traders, is that they pick their shots instead of, spray and pray. And I think people are going to get burned if they just keep throwing money at the hottest sectors, because I think the sell-off, as we can see, could be very, 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 very violent very quickly.
Yeah, and I think that's why, we're sensitive to how TLT is performing against the S&P 500, because right now we still have that positive correlation with stocks, but what we're looking for is that negative correlation where TLT starts to bolt and then the equities start to fall off. So we're going to need to see 2, 3, 4 days of consistent negative correlation where I would say, okay, I think this is starting. But once we get that, then I think that is going to set off several months of declining equities. Anything risk on is going to be down. And like you said, once that starts, the big money is going to go flow into bonds. I think the trade's already started. That's why I think you see TLT trading the way it is, bottoming out below in the low 80s and then coming back above, and now it's trading at 100. I mean, that's putting in a bottom, guys. So I think they're positioning, and I think now it's just a matter of time before we start getting that macro data that backs up what a lot of the graphs we've been showing you guys have been pointing to, and that is that things are slowing down and we're getting prints that are totally recessionary. So if we haven't already entered one, it will be recognized very soon, and then that trade will play out, and then we can look, higher after that washes out. So, but like you said, with this chart, it's a really interesting scenario because we have a whole generation that isn't used to a stock market being flat or down or just not really growing for several years. That's a long time not to have any new 0 all-time highs in any stock in the S&P 500. That is a long drought.
Yeah, it's insane. Look at the 1930s if you want to just scare the heck out of yourself.
Yeah.
So anyway, Phil, I thought it was interesting to share with people. We're going to have today's Saturday. We'll be back with you guys on Tuesday. So no podcast on New Year's Day. Enjoy the weekend and, do your own research here. We'd like to know your thoughts. Thoughtful comments are appreciated. Trolls, just go bother somebody else. And you guys, thank you for listening. This is Bob and Phil signing off.
Yeah.
Trade genius.